What if you owned a business that made money even when nothing happened? Every day, millions of people pay for insurance. They insure their cars, their homes, their businesses, their health, and even their lives. Most of them never file a claim, yet they continue paying every month. So where does all that money go? The answer may surprise you. Insurance is one of the biggest businesses in the world. Some insurance companies collect billions of dollars every year, but they don't keep all of it. They also pay billions when disasters happen. So, how does an insurance company actually make money? How much does it cost to start one? And if you had enough money, would owning an insurance company be a smart investment? Let's find out. First, what is an insurance company? An insurance company is a business that protects people and businesses from financial loss. Instead of paying a huge amount after an accident, customers pay a much smaller amount every month. This payment is called a premium. Imagine 1,000 people each pay $100 every month. The company collects $100,000. Not everyone will have an accident. Only a small number of customers will need to make a claim. The insurance company uses part of the money to pay those claims. The remaining money helps cover salaries, operating costs, technology, and, hopefully, profit. This system has existed for hundreds of years. It works because insurance companies spread risk across millions of customers. The more customers they have, the more predictable their costs become. Insurance companies don't just sell one type of insurance. Some insure cars, others insure homes, businesses, factories, ships, hospitals, and even satellites in space. Some companies specialize in health insurance. Others focus only on life insurance. Large insurance companies often offer many different types of coverage. Every policy is carefully priced. A young driver may pay much more than an experienced driver. A house in a flood zone usually costs more to insure than a house on higher ground. Insurance companies use huge amounts of data to estimate risk. They study accidents, weather, crime, health records, driving history, and many other factors. Their goal is simple: collect enough money to pay future claims, while still making a profit. It sounds like a simple business. But building a successful insurance company is far more complicated than most people realize. Now comes the biggest challenge: running the insurance company. From the outside, it may look like a simple office business, but behind the scenes, thousands of decisions are made every single day. The first step is attracting customers. People buy insurance through websites, mobile apps, banks, insurance agents, and large companies that offer insurance to their employees. Every new customer is carefully evaluated. The company wants to understand one thing: how risky is this customer? A driver with many accidents usually pays more. A factory near the ocean may cost more to insure. A person with serious health problems may also pay higher premiums. The higher the risk, the higher the price. Once customers join, the company begins collecting premiums every month or every year. Millions of customers paying regularly creates a steady flow of income. But the company cannot simply keep that money. It must always be ready to pay future claims. That's why insurance companies keep enormous financial reserves. These reserves protect the business during unexpected events. Imagine a powerful hurricane. Thousands of homes are damaged. Or a major earthquake strikes a large city. Suddenly, the company may need to pay billions of dollars in claims. Without enough reserves, the business could fail. Insurance companies also buy something called reinsurance. Think of it as insurance for insurance companies. If a disaster becomes too expensive, another company helps cover part of the losses. This reduces financial risk. Technology is another major expense. Modern insurance companies use artificial intelligence, fraud detection systems, mobile apps, online claim processing, and customer service platforms. These systems improve speed, reduce costs, and help detect fake claims. The company also employs thousands of people: claim specialists, customer support teams, risk analysts, lawyers, software engineers, and sales staff. Running an insurance company is not cheap. But one thing makes this business different from almost every other industry. Insurance companies often invest the money they collect. Before many claims are paid, that money can be invested in government bonds, stocks, real estate, and other financial assets. For some of the world's largest insurers, investment income is almost as important as insurance itself. This creates another powerful source of revenue. But one important question still remains. How profitable is an insurance company? And is owning one actually worth billions of dollars? So, is owning an insurance company worth it? The answer depends on one thing. Can the company collect more money than it pays out? If claims stay under control and investments perform well, an insurance company can become incredibly profitable. Some of the world's largest insurance companies generate tens of billions of dollars every year. But this business also comes with serious risks. A major hurricane, a powerful earthquake, massive wildfires, or a global pandemic can create enormous losses in a very short time. Competition is another challenge. Hundreds of companies compete for the same customers. Offering lower prices may attract more people, but it can also reduce profits. Trust is everything. If customers lose confidence, they will choose another insurer. That's why successful insurance companies focus on fast claim payments, good customer service, strong financial reserves, and smart risk management. Technology is also changing the industry. Artificial intelligence helps detect fraud, predict future risks, and process claims much faster than before. Companies that use technology efficiently often reduce costs and improve profits. So, would owning an insurance company make you rich? It certainly can, but only with excellent risk management, strong financial planning, and years of experience. Final verdict: initial investment, operating costs, revenue potential, business risk, profit potential. Would you invest billions of dollars to own an insurance company? Or would you choose another billion-dollar business? Subscribe for more videos.